G'day and welcome to this week's video. Before we get started, I'll remind you that down below in the description there's a whole heap of free financial resources there. There's some courses, there's ebooks, there's all sorts of information there that can help you with your decision making around your personal financial situation. So encourage you to go down, have a look, take control and sign up to some of the free courses that we've got there. This week we're actually going to have a look at Warren Buffett and ask the question, what does Warren Buffett have that most investors, including professional investors, have? Apart from buckets and buckets loads of money, he has absolute bucket load of patience, and this I think is one of his defining qualities in terms of his mind, and his ability to read and interpret financial information is exceptional, there's no doubt. But within the world of finance there are many people similar to that work in funds management, but the one thing that he has is absolute patience. So he's the chairman and CEO of Berkshire Hathaway, which is essentially an investment company that he's built over the last 50 plus years, that has gone out and purchased whole businesses or parts of businesses like Coke, and buying Apple shares over time. Now, one of the key differences that Berkshire Hathaway is his business, along with the shareholders and his business partner Charlie Munger. They have no asset allocation mandate, so there's no rules to say that they have to be 100% invested into businesses at any one time. And this flexibility gives him the ability to sit on a lot of cash and to be patient to wait for the opportunities. And I've taken a few quotes out of last year's 2017 annual report, and where it states that part of the the business structure is to build the business, to build Berkshire Hathaway. They look to acquire businesses, and you're seeing quote here at a sensible purchase price. And he's made a note here that essentially there wasn't too many transactions done in 2017, and he's pretty well said that the last requirement being a sensible purchase price, the last proved to be a barrier to virtually all the deals that they reviewed during 17, and as prices for decent but far from spectacular businesses were at an all-time high. So what caused this? And he said the ample availability of extraordinarily cheap debt in 17 further fueled the purchase activity. So he's saying that CEOs, other businesses were out there, they were actively borrowing money to complete acquisitions, and that has pushed the value of these businesses up to a level where Warren, Charlie and their team of analysts were just not comfortable. So if they're not comfortable, they don't want to overpay, they do nothing, and this is where the patience kicks in. So how much patience do these guys have? Well, at year end they had $116 billion in cash and treasury bonds. So this is extraordinary amount of cash, and they've made comment here that this amount of liquidity, the cash that they've got, earns a pittance. Interest rates are very low there, so they don't earn much money on it, and it's far beyond the level that Charlie Munger and I wish to have within the business itself. So they've got too much cash, but they're just not willing to go out and spend it just because it's sitting there. And last comment here from is, our smiles will broaden when we have redeployed Berkshire's excess funds into more productive assets. So he knows over the long term that cash is not a productive asset, it earns a pittance, and he wants to get it into the right asset class, and that is owning high quality businesses that grow their revenues and profitability at high rates of return. So for me, this is one of the true outstanding features of Warren Buffett, Charlie Munger and their business Berkshire Hathaway, that if they're not happy with the pricing, they believe things to be overpriced, they will do nothing. They will openly say this in their annual reports, which I encourage you to read, because there are bits of gold within each year's report and lessons for all investors to understand. So thank you for listening. Give us a thumbs up and subscribe to the channel if you haven't already done so, and we'll catch you next week. Thanks for listening.